those updates. What's happening in the mortgage world right now. So today we're going to be focusing a little bit on those listings that just need a little love, right? And I've noticed that a lot of our buyers that were in the $400,000 range, they're those homes that are going quick, they may not be the strongest borrower, so their offers might not be the strongest. They may be an FHA borrower. We're in that market again where if it's a really good home, there's multiple offers. So what I wanted to address is how can we take our buyers that have the ability to do a $400,000 loan, but they're just getting beat out. But there's homes out there that with a little TLC and a little, little vision, you can look at that house and say, you know what, there's potential there. Let's do a rehab loan. And so I'm going to go over kind of what we can do for that buyer and how that can maybe open up a few doors to get somebody exactly what they want. And even those homes that really look nice, but they need just a makeover, but the borrowers don't have that money to do so, so they skip over it. So some of our buyers have looked at homes and like, you know what, it just doesn't have the upgrades. I only have 3 or 5% down. I don't have the money to update it. And my wife wants a new kitchen or whatever it might be. Or I hate the tile and I'm not going to buy this house because it's going to be too expensive and I don't have the money. So we're going to look at some ways to really get into those homes that are on the market a little bit, that are ugly, to see what we can do for them. But for now, right before we get into that, let's go into kind of where we are with the markets. So I'm going to go ahead and share my screen right now and then jump right into the markets. So first off, everyone's been hearing that May 10th is going to be the day that the CPI is going to come in. The inflation numbers are going to come in lower than expected. I honestly don't feel that it's going to happen. I know everyone's saying it's going to be, but I think it's going to be a slower play than this May 10th, like a couple days from now, going to have our inflation numbers come down. If you haven't noticed, gasoline is not as cheap as it once was a couple months ago. In April, we had a pretty big spike in the gasoline costs. If you're in Arizona, in Maricopa County, you're seeing that, like, why is our gas in the 5s when it used to be in the 3s? If you go up to the different counties, Pinal or Pima County, the gas is still in the 3s. I just filled up last night in Prescott for $3.99 a gallon. So down here, though, it's like $5 a gallon in Maricopa County. So anyhow, make a long story short, I believe that the inflation is going to be stickier this go round. So we'll really keep an eye on that. Right now, if you look at these candlestick charts, today we're bouncing in between all of these Fibonacci levels and all of these 200-day and 50-day moving average. We're in a kind of a squeeze play. So there's not going to be much movement here. We need some big news. We're hoping that May 10th would bring like a really good low inflation number and that we could pierce through this again. We tried here and it bounced right back. We went up and then went right back down. So we're trying to get above it. I just think it's going to be a little bit later in the next couple months or next month or two than it's going to be this May. So having said that, we're carefully watching this. We're probably locking our customers in earlier rather than later. We're going to see what happens on the 10th with the inflation, but we're going to be very cautious because we lost 16 basis points today. We were just above this Fibonacci here. We didn't move a lot, but that's where we are. So let's go have a look at Mortgage News Daily. Just to get it, I always go here, guys, just because it's a nice way of looking at kind of what mortgage rates are doing. So we're right in the middle 6s. As you can see, we're a little worse now on a 30-year fixed. FHA, we're in the low 6s. So we're still in the 6s. We haven't moved much. But what we're hoping for is for this bond market to go pierce through these and set some new higher daily moving averages so that we can have some sustainable lower rates in the near future here. So rates are still good. I don't think that the inflation numbers are going to be as good as we hoped because of the oil prices. And there's also a few other things that are intermixed in that. They revised a year ago's inflation numbers to be better than they were. So they just revised that. So they went from 0.5 to 0.4. So when we have the new number come out, if it was 0.4 instead of 0.5 now, that change is 0 because they revised a year ago's number just this last week. So some goofiness on that, but it is what it is. Their formulas always change for how they derive their CPI, but that's a whole nother topic in itself. So that's where we're at today as far as rates. Let's jump into the report that I have presented for you guys on the rehab loans. So I'm just going to go ahead and start this right now. And we've got today's Monday morning mortgage message, the M&Ms, right? So home style renovation loans and FHA 203K loans. They are very different, but very similar. There's the home style renovation loan can be a lot more extensive than the FHA loan. And FHA loan has two actually versions. There's like a mini and there's a full. And we'll go into that in just a second. But I really wanted to make sure everyone understands just the power behind these, because this could be another advantage and another thing that you can tell your buyers as far as an opportunity to really dial in and get a home that they really love. So let's jump in and go into this. So this is an actual listing. All right. This is listed at $275. This is in the Tempe, Phoenix area. It's a nice little brick home. Needs a lot of help. Inside, they started getting modernized, but they gave up, and it has a lot of potential, but it's just ugly. It just needs some TLC. So if you were to update this home in this circumstance, I'll move my face out of the way here. The $275 purchase price, $150,000 would totally renovate this house. And when I say totally renovate, that's redoing everything, that's updating it, that's getting a whole new kitchen, that's getting all new appliances, that's really dialing this in. All the bathrooms, like really making it modern. And it's a cute little house, and it's not in a terrible area. It's just old and run down. Like this vine is creeping into the roof and the attic space. So what would it look like for a buyer to purchase this? Like, what would it take? That's the question, right? So when you're doing a rehab loan, here's what this home would look like. The total numbers, the purchase price, let's just say you get $250 for it. Okay, you go in a little low because it needs a little TLC. And the cost of to renovate is $150,000. You're into this home for $400,000. Now, as a buyer, when you're doing a home ready, or when you're doing this conventional construction loan, basically is what it's at, you're going to be doing 3 to 5% on the $400,000. It's the total cost. So you're not having to pay all of this extra, or it's not 20% down, or it's not this exorbitant number. You can do 3% if you're a first-time home buyer and 5% down on the $400,000. So you can be into this home right here for 5% or 3% down, and all of the cost to refurbish this home will be paid for through the loan, just like a construction loan. And it'll take some time, but this is a way to get exactly what you want. If it's in the area you really want and it needs some help, this is a great little program. So 3 to 5% total numbers on this. Here's another one. This one looks pretty good on the outside, right? Looks like it's maintained. Looks like it was just painted. There's definitely some perks here. A little older, definitely dated. I mean, if you look at the kitchen, definitely needs updating. So if you went in and you did all new kitchen, and the bathrooms on that were very similar, just updated everything for $100,000, and you just came in a little lower, you did $100,000 renovation loan, you'd be at $350,000 purchase price or total cost on this transaction, and the borrower only has to bring in 3 to 5%. So I want you guys, when you're seeing homes like this, I want you to just maybe put them on their search, just to say, hey, we have some other homes in this area that are a little lower price and need some help. Don't discount that, because you could make it exactly what you want, and you still only have 3 to 5% out of pocket. Yes,
hey, Sean,
you can do more down. Yes.
If you think, okay, it's going to be 150,000 to rehab this home, and it only comes in at 115, do you just take that extra and pay it towards the principal of the loan, or can you just use that money for anything at that point?
We would adjust the loan like midstream. So let's just say that you got through the process, and your general contractor said just that, it's not going to cost us as much, then you just wouldn't finance as much. The loan would be less. So your total draw periods would end. The final, as you approach the end, would just be adjusted.
Oh, so it's like a construction loan.
It is. It's exactly a construction loan.
Okay.
Yeah. I mean, it's not truly a tear down construction loan. There are some differences, and we'll go over those in just a second. But it's like a mini construction loan. So here's some of the differences, and I want to make sure we're going over this. For the home style, which is the conventional version, health, safety, eligible repairs, health, safety, livability, structure repairs, and luxury items allowed. So upgrading everything, that's a luxury item. You can do that. Structural repairs, if it needs new roof, if it needs, like it's got some really bad trellises that need to be fixed, or the back patio needs to be redone because it's not to code. A wall needs to be moved for some reason. You can do that. There's no minimum on the repair amount. So I'm going to go through this real fast for the home style. We're going to see some of the differences. You can do this as a purchase or a refinance. So that's a pretty exciting piece of this. There is no minimum age to the property. So let's expand on that a little bit. If you just bought a home that was a new build and you decided to get the bare bones, just the bare bones, because you don't want to spend all of that money on all of their products, you want to do it as you want, as your own, you could go in there, buy the house, and then refinance it with this product. So you could do that because there's no minimum age on how, I'm sorry, that's the age of the property. Sorry, property age. I'll get into that in a second. But there is an age on how long you've owned the property. Renovation amount. So you can do maximum of 75% of the value of the property. So that's you can do quite a bit. In other words, if the number's really high. Number of contractors, when you do the home style, it has to be one person managing it all. You can do conventional up to 726,200, purchase or refinance. But this is the fun part, guys. Look at the occupancy. You can do a primary residence, a second home, or an investment property on this. So if you have an investor that's looking for a property, they have to follow the normal conventional investment property down payment. So 20% down, 25% down, but they can do a home style and they can fix it to make it be however they want before they start renting it out. Very cool. Contingencies, that's if there's extra costs that come into it, there is a contingency account that's created for any unforeseen deficiencies or health and safety issues that pop up when you're doing it. That's basically the majority of this. Draws, I mean, that gets into how you're taking the money just because it is a construction loan, but that's the meat and potatoes of it. Now, the FHA version of this is only for single family primary residences. So it's a little bit different, but you can still do normal livability and cosmetics, but you can't do on the limited. This is the mini one. So the limited is the mini one. You can't do luxury items. So you can't use this one to do total upgrades in the house. This is going to be cosmetic stuff. So like it needs paint. It needs a few shingles here and there. The carpet is torn up and it just needs a few carpet repairs or new carpet here and there, or some health and safety. There's some broken windows. The wiring is bad, needs to be rewired, things like that. That's the limited. These are really fast and really, really simple. And maximum renovation, 35,000. So it's a very small amount. Property can be 1 year old. And so that's a good thing. Again, this property age over here could be brand new. And up to 3 contractors can be involved in it. So you can have multiple licensed contractors involved in that, but it's only FHA county limits. So that's a little drawback because home style can go a lot higher than this one. Occupancy, it's only primary residence when you're doing the FHA 203K limited. And contingencies are only for unforeseen deficiencies, health and safety. Remember, that's the piggy bank, that extra money that's put in the loan. Basically, that's the difference. You have 6 months to do both of these to complete. The FHA 203K, the standard, that's more of the heavy lifting. You can do structural repairs, you can do livability, so you can do the whole roof. You could do all new carpet if the carpet's disgusting, if there's mold remedy, new windows, no luxury items, so you can't put a pool in, but you can update broken appliances. You can do all of that. So this is more of a full-blown construction loan. The nice thing, the biggest difference between the FHA 203K and the standard, the limited and the standard, and the home style renovation is the home style, it lets you do luxury items. So it lets you do those extra things like, let's do an add-on. It's more of a full-blown construction loan. So when we're looking at the different properties, obviously we're going to look at the price of the home, see which bucket it belongs to, but we're going to see what needs to be done and what the potential buyers are wanting to be done to just determine which one's going to be best. But another big difference is the home style allows second homes and investment properties. So that's a big difference. So that's really it on the differences there. But I really want you guys to not discount these ugly properties, because I mean, this one right here just looks terrible. You think, oh my gosh, this is going to be gross. It's in a good area, but like, I don't have the money after buying that to do anything to this. My wife doesn't want to move into this, and my husband is not a handyman, just like me. It could be where, could be a lot of reasons, but you could totally redo this house and make it be spectacular. And that's why I like these before and after pictures, because you could really, on the home style renovation, you can make it look spectacular. So don't discount those. Great option for you. And I really think you guys should keep that as an option when you're looking at homes with buyers. And I can help you with that as far as how to portray that to them. Now, I want you also to, don't forget, guys, that I have my YouTube channel. So youtube.com/@mortgageupdates. That's my channel. You can always just Google Sean Wool on YouTube. And I've got mortgage tips. I've got loan programs. I've got Why Use Us. I've got home buyer seminar videos. And I've got all of the updates that I do are all in here. So go ahead and save this YouTube to your account, and you can always go back on these to reference them later. But I really want you guys on this particular channel to dive into the different programs, the mortgage tips as often as possible, because I do post some pretty fun things in there. Any questions on this program, on basically their construction loans? Any questions on those? Wow, I'm so good at this. I gave all the information away. You guys have it 100%, and there's not going to be any calls later. I'm just kidding. I'm just kidding. If you do have questions, I'm always here as always. And hopefully, guys, the inflation numbers on May 10th, which is just 2 days away, will be good. But I don't think they're going to be as good as we hoped. So we're going to keep watching that. The rates are getting better, guys. They will get better. It's just going to be a slow game until we start to see inflation get better. So let's just hope that OPEC will open up their production so we can refill our reserves. That's one of the reasons why the rates are higher, because the inflation on that piece, I think, when they said no to our additional production that we wanted, that kind of messed up the markets a little bit on oil. So we'll keep an eye on that carefully. And other than that, you guys have a phenomenal day. Is the PQF process the same? Good question. Yes. However, there is a big section of this that we need to really be careful of, and that's the bidding process. So we need to know how much it's going to cost to do what we want to do on that property. So we have to pair ourselves with a general contractor that we can trust to get a good bid, so we know what the final cost will be on this. So that's going to be an important piece of that, because buying the home is one piece, but knowing how much it's going to cost to do what we want to do is going to be another piece. So I guess finalizing what the final price would be is one piece. The pre-qualification, we'll just get them qualified up to the maximum like normal. So If they're qualified up to 400,000 and they're looking at this 275, we know they have 125,000 to play with on the construction loan, on the rehab loan. So we'll just pre-qualify them up to their max, and then we can figure out where they want to be after that. As far as the purchase price on the ugly homes that are out there, there's ugly homes out there. That's for sure. So, good question though. Any other questions? All right, guys. Well, it's Monday, and it's going to be a busy week. We have PPI at the end of the week as well, which is the producer price index. So that may give us a little bit more help with inflation, but we'll keep our fingers crossed. They look for rates this week, guys. Enjoy your week. If you need anything, we're always here for you.